How's everybody doing? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. I hope everyone is having a wonderful Memorial Day weekend. This is the weekly banking update, the main show of the channel, where I try to bring you the week's banking news, as it were, and all the happenings in the wonderful world of banking. So, I want everybody, just a quick note, if you can hang out till the end of the video, I'm going to give a shout out to a couple things I want to address. I want to talk about just all of the people kind of in the U.S. and around the world that have started listening to this podcast, which is absolutely incredible. I wanted to give a shout out to one of my subscribers in particular, just because I wanted to share that a little story with you. So stick around till the end for that. And I just want to say, before we jump into the news here, I just wanted to say I hope everyone is enjoying the Lords of Easy Money series, because I just came out with two more episodes 18 and 19, and we finally finished the book, as it were. But I've got two more episodes of that series coming out this week to kind of cap it off. I'm just doing kind of a recap of part 3 of the book, which was the last 4 chapters. I did a recap of part 1 and a recap of part 2, so I figured I'd just do a recap of part 3, and that way, the way that the series is designed is that you can go through and listen to the chapter by chapter, or if you just want to kind of go through it a little bit faster, you could just watch the 3 shorter videos with the very short recaps of the 3 sections of the book, and you could kind of get the blow by blow, so to speak, in a couple of different formats there. So I was going to put that out, and then the final episode I think people are going to find very interesting, because the book ends at basically the end of 2021, and so we've got 3 more years since the end of the book, and quite a few things have happened in the last 3 years. And so I just want to bring forth a bunch of charts. Obviously, we had the massive increase in interest rates. We've had the increase in inflation over the last few years. All things created by what the Federal Reserve has done. And so like I said, I'm going to try to bring that up to the current date when I put that episode out. So like I said, so hang around and wait for that. Like I said, hopefully a lot of good things come in there with that as we wrap that series up. And then, like I said, I'll just be interested to see what people think after they have a chance to kind of see the series as a whole. Like I said, I'll just be interested to see how people feel about that. So, okay, so now let's get into some news here for the week. So as far as, I'm going to kick it off with economic reports that we have coming up this week after obviously Monday's the holiday. Tuesday, we have the 2-year and 5-year Treasury note auctions, which a lot of people will be looking at very closely, as the Fed has been rolling and selling far more short-term treasuries than longer-term treasuries. So we'll see, keep an eye on what's going on with that. On Wednesday, we get the beige book from the Federal Reserve, and we get API weekly crude oil stock. On Thursday, we get continuing jobless claims, initial jobless claims, GDP for quarter over quarter. We get initial jobless claims. We get goods trade balance. We get pending home sales. And then on Friday, we get core PCE price index. We get PCE price index month over month, year over year. We get the Chicago PMI. We get the Atlanta Fed GDP Now report. And we get the U.S. Banker Hughes total rig count. So we get a lot of employment data. We get some GDP data, and we get some inflation data. So in a little bit of a shorter week, we're going to get hit with a lot of data next week, which will be interesting to see what some of the things come out there. Okay, now let's get into some news here for a minute. Okay, so we got a lot. It never amazes me how much stuff is going on. So the U.S. Securities and Exchange Commission approved applications from NASDAQ Inc., CBOE Global Markets, and New York Stock Exchange to list Ether, cryptocurrency-based exchange-traded funds, ETFs, Reuters reported. Until last week, fund managers were expecting a rejection of their proposals by the agency, but the regulator's latest move is a surprise win for issuers, which also have to get approvals before their products can launch, according to the report. The SEC's decision on Ether ETF listings comes less than 6 months after its approval of spot Bitcoin ETFs in January. Citigroup is asking about 600 U.S. employees who were earlier eligible to work remotely to now report to company offices 5 days a week, Bloomberg News reported. And then basically, what are we? HSBC Holdings and Barclays are also among banks requiring more staff to work from the office as potential stricter return to office rules are expected to be implemented by the U.S. Financial Industry Regulatory Authority. The agency has, however, said that there is no rule requiring registered persons to work from the office 5 days a week. Meanwhile, HSBC employees going to the bank's new location in New York's Hudson Yards area has increased to 80%. So I want to go back to that for a second. So the U.S. Financial Industry Regulatory Authority basically earlier in the week came out and basically was saying like, yeah, we're going to force people to return to work. And then the agency had to backtrack because they had to come out and basically say that like, yeah, there is no rule, which is the first thing that came to my mind. I said there is no rule. How can they basically force anybody to do anything as it relates to where they're going to work? Because they have no rule. There is no rule. There's nothing in place. So it's a very curious thing there. So I don't know what the U.S. Financial Industry, Regulatory Authority is ultimately going to do at the end of the day. But yeah, I don't know. Just an interesting thing to note. But one thing is for sure, it definitely appears that companies have, you're seeing a 180 here in the philosophy and the approach to this, where companies are starting to get pretty hardcore about getting their employees back to the office. Okay, continuing on. Greenwich, Connecticut-based Numisma Bank received conditional approval for a master account and cash services through the Federal Reserve Bank of New York in March, American Banker reported, citing a company spokesman. Numisma Bank is a de novo uninsured bank backed in part by Sinosure Group, a private equity firm co-founded by Randall Quarles, former Federal Reserve Vice Chairman for Supervision. Yes, that is a very interesting. We'll have to keep an eye on that one. I'm sure there'll be more information to come there. The Commodities Future Trading Commission ordered J.P. Morgan Securities LLC to pay a $200 million civil monetary penalty for its failure to caption billions of orders in its surveillance systems. J.P. Morgan admitted the facts in the regulator's order in two sections: the scope of surveillance data gaps and the causes of surveillance data gaps. The company also acknowledged that its conduct in those sections violated the CFTC regulations, but otherwise neither admitted nor denied the findings of fact, the regulator said in a press release. Now, what's interesting about this story is I feel like there's a lot more to this. I feel like there's more that's going to come out about this. This is one of those stories that kind of gets put out there, and they kind of throw it out there just to kind of get it out there, but not giving you the full details and the full scope of what is happening. And then a couple weeks or a couple months later, all of a sudden you get the full scope, but then it's kind of not as much of a thing because they already put it out. It's like I said, this is like, how companies report stuff sometimes to try to massage the effects, if you will, of what's coming down the pike. So, okay. Kathleen Martin, a former managing director at Citigroup, filed a lawsuit against the company and COO Anna, if I'm saying this name right, Anand Selva, alleging that the bank fired her in 2023 for opposing attempts to falsify data provided to regulators, Reuters reported. Martin alleges that Selva wanted her to hide important information from the bank's data governance metrics from the Office of the Controller of the Currency, as it would make the bank look bad. The report added the data governance work was related to a 2020 OCC consent order, Reuters noted, citing Martin's lawsuit. A Citi spokesperson reportedly called the lawsuit meritless and said the bank will vigorously defend against it. Just so people understand, Citigroup has a long history of stuff like this. So this is not shocking. Okay, executives from Bank of America, JP Morgan Chase, and Wells Fargo are expected to testify before a Senate panel this summer related to the losses of customers from fraud on the Zelle payments network. American Banker reported in 2022, customers at these banks submitted claims worth $456 million lost to scams on Zelle, but nearly 3/4 of the losses were never repaid by the three banks, according to Senator Richard Blumenthal, who chairs the Senate Permanent Subcommittee on Investigations. Yes, I will be very interested to see if anything of note comes out of these hearings on the Zelle payment network. The whole, we saw a lot of fraud on not only Venmo but on Zelle networks as well over a couple-year period of time. So it'll be interesting to see if just anything of note comes out of this. Canada's Office of the Superintendent of Financial Institutions, in its latest risk outlook, said 76% of outstanding residential mortgages as of February will be coming up for renewal by the end of 2026, and the payment shock faced by homeowners renewing their mortgages during this period is among the most important risks currently in the financial system. Yes, that sounds really bad. So we'll have to keep an eye on that one. New York-based WisdomTree Inc. received approval from the UK Financial Conduct Authority to list a pair of physically backed cryptocurrency exchange-traded products tracing Bitcoin and Ether on the London Stock Exchange, Bloomberg News reported. The products may start trading as soon as May 28th. Intercontinental Exchange agreed to pay a $10 million fine to the U.S. Securities and Exchange Commission to settle charges alleging that it caused the failure of 9 subsidiaries, including New York Stock Exchange LLC, to timely inform the agency of a cybersecurity breach in 2021 as required by regulation systems, compliance, and integrity. And just like the other article I just talked about with JP Morgan, this is another thing that is going to, they caused the failure of 9 subsidiaries. That's fascinating to me. So we'll have to keep an eye there. I can almost guarantee there's going to be more information on that. Okay, Charles Schwab plans to launch an alternative investment platform for individual investors this year, including categories like private equity, venture capital, private credit, and hedge funds. So I will be interested to see what that looks like. BlackRock, Grayscale Investments LLC, and Bitwise removed provisions for staking Ether in their amended 19B4 forms filed with the SEC for their proposed spot Ether exchange-traded funds, CoinDesk reported. The agency's decision on the ETFs is expected May 23rd. Let's see here. The U.S. House of Representatives passed the Financial Innovation and Technology for the 21st Century Act, the FIT 21, which provides regulatory clarity and consumer protections for the digital assets ecosystem. Introduced in July of 2023, FIT 21 provides the Commodities Future Trading Commission with new jurisdiction over digital commodities and clarifies the SEC's jurisdiction on digital assets offered as part of an investment contract. Now, it certainly looks like, in other words, there's been all this talk about regulating cryptocurrency and stable coins and everything else. And it certainly looks like everything is moving to the point where they're going to label cryptocurrencies as a security, and all stable coin. Like it's all going to be, all of this stuff is going to be labeled a security, and it's going to fall under the provisions of the SEC and the Commodity Futures Trading Commission. Which is very interesting, because if you did have plans on, if the central bank did have plans to create a central bank digital currency, you could now neatly move all of your competition out of the way by basically making it a security, because it's not a currency, it's a security. And there's a huge difference there. So like I said, that just appears what it looks like how this is playing out, but we'll see. The Small Business Administration has rejected plans to sell any part of its COVID-19 Economic Injury Disaster Loan EIDL portfolio, stating that the government will net considerably more money retaining EIDL loans than it would get by selling them. American Banker reporting, citing a letter by George Holman, the agency's associate administrator for congressional and legislative affairs. And then here's something interesting. So the Biden administration emphasized its support for the Federal Reserve's independence in a blog post by the White House Council for Economic Advisors. Empirical evidence shows the evolution towards central bank independence has coincided with a long-term decline in inflation in advanced economies and corresponds to well-anchored long-term expectations. No. And you also had Thomas Massie introduced a bill to abolish the Federal Reserve, if anybody didn't notice that. And like I mentioned at the beginning, if you haven't followed the Lords of Easy Money series, you need to go out and watch that, because then you'll understand exactly what the Fed has done and exactly why the Biden administration would come out and emphasize their support for keeping the Federal Reserve independence, because the calls for something to happen with the Fed are growing louder and louder by the day. Okay. Let's see here. Robinhood Markets lowered its interest rates on margin investing in a bid to give individual investors the cheapest funding in the market. Robinhood said its new rates now range from 5.7% to 6.75%. Before the new rates, Robinhood charged 12% for margin investing or 8% for subscribers to Robinhood Gold, as per its website. Other brokerages currently offer ranges from 7.83 to 14.2%, according to the Wall Street Journal. Yeah, another wonderful move on the part of Robinhood. We'll see how that plays out for them. Yeah, let's get all of these unsophisticated investors in there trading on margin. That's gonna end well. U.S. Treasury Secretary Janet Yellen warned German bank executive against violating sanctions against Russia, lest they face potential penalties that would cut off dollar access. Reuters reported. I guess interesting news. The U.S. Financial Industry Regulatory Authority is set to implement a more stringent return to office rule. Like I said, but it's, but they got, that's a rule with no teeth. All right, let's see. What else do we got here? Okay, the U.S. House of Representatives is expected to vote this week for a bill that will give the Commodities Future Trading Commission the primary authority to oversee digital assets. Yeah, we talked about that. Sorry. The U.S. House Financial Services Committee passed for full House consideration 11 bills that include measures seeking a faster and more transparent bank merger review process and the provision of relief for de novo banking organizations. Yes, good stuff. But ultimately, we'll see what happens with it. Is the Senate going to pass any of this stuff? Who knows? And let's see. Okay, so let's move on to some of the other stuff here. This, far more interesting. The House passes a CBDC bill. So House members who voted to pass legislation restricting the ability of the federal government to introduce a U.S. central bank digital currency. So the CBDC Anti-Surveillance State Act, H.R. 5403, introduced by House Majority Whip Tom Emmer, passed by a bipartisan vote of 216 to 192. The bill, which ICBA was the first bank trade to support, was a key lobbying issue during the recent ICBA Capital Summit. So what are the details of the bill? It prohibits the Federal Reserve banks from offering products or services directly to individuals, maintaining individual accounts, or issuing a CBDC to individuals or through an intermediary. Prohibits the Federal Reserve and the Federal Open Market Committee from using a CBDC to implement monetary policy. I love it. I'm ecstatic that this bill passed the House. However, it has to go into the Senate. It's got to get passed by the Senate, and then it has to get signed by Joe Biden. My guess is that Maybe it gets through the Senate. My thought would be the Senate will probably do something to water this down, and then even if it does get through the Senate, it'll get Joe Biden won't sign that. So just to tell you where he's at and where the administration is, that like this bill is very interesting for a lot of reasons, because it's going to be very telling as to where the administration is in terms of a central bank digital currency. Like if they're for it, they're going to kill this bill with the quickness, and they're going to come out against it in the Senate. Joe Biden will start screaming and yelling about it, saying he won't sign it. If it gets passed, it comes to him, he'll veto it. So this, like I said, this bill is very interesting, and it's going to get very interesting here now as it moves to the Senate. So, but I was super excited to see this bill pass this week. It's obviously huge news, and very, very happy to see it. So, House Subcommittee passes draft data privacy bill. The House Energy and Commerce Committee Subcommittee on Innovation, Data, and Commerce advanced a draft legislation to establish a national data privacy standard. So the American Privacy Rights Act discussion draft would preempt state data security laws, though it does not include clear language exempting financial institutions subject to the Gramm-Leach-Bliley Act data security standards. So the bill passed out of the subcommittee by voice vote will now be considered for the full committee. So we'll see what happens there. Little bit of financial data. New home sales dropped in April. Sales of new single-family homes fell 4.7% in April and are down 7.7% from the previous year, the Commerce Department reported. The median sales price for the month was $433,000, up slightly from March. Call reports. This is important for banks. Agencies announce the next step in the revised call report. So federal banking agencies announced they are moving forward with proposals to amend certain references in call report and FFIEC 002 forms. Last fall, the agencies proposed revisions to all three versions of the call report. So after considering the comments received on these notices, the agencies are moving forward with certain proposed revisions related to replacing references to troubled debt restructurings with modifications to borrowers experiencing financial difficulty, certain technical clarifications to reporting web addresses of depository institution trade names, and then standards for electronic signatures to comply with the call report signature and attestation requirements. So I think some good news there. Let's keep going here. This is very interesting. The CFPB rule says that buy now, pay later lenders are credit card providers. So the Consumer Financial Protection Bureau issued an interpretive rule that says buy now, pay later lenders are credit card providers. The rule requires BNPL lenders to provide consumers some key legal protections that apply to conventional credit cards, including a right to dispute charges, demand refunds for returned products, and receive billing statements. Comments on the interpretive rule are due by August 1st. So this is very interesting. We will, again, this is something to keep an eye on now over the next couple of months to see how this plays out. Like, will there be from the buy now, pay later lenders, will they sue? If this rule looks like it's going to come into effect, what will be the comments that will come out by August 1st? Like, will people be in support of this? Will they feel like this is a good start, but not far enough? Maybe they need to do more here. So it'd be, like I said, it'll be interesting to take off. Fed officials uncertain of rate restrictiveness. So Federal Reserve officials cited their uncertainty about the persistence of inflation and agreed that recent data had not increased their confidence that inflation was moving sustainably toward 2%, according to the minutes of the latest Federal Reserve Open Markets Committee. Existing home sales declined in April. Existing home sales decreased 1.9% in April and were down 1.9% from a year ago. And then I think I'm going to go with that. So I got a couple other things I want to get to here right before the end. So I want to share an article here with everybody real quick. So this has some really interesting charts in it. That's why I wanted to share it with everybody. So U.S. banks exit the first quarter of 2024 with lower net charge-offs across several loan segments. So net charge-off rates at U.S. banks declined across multiple loan segments in the first quarter from record highs at the end of 2023. The commercial and industrial C&I net charge-off (NCO) rate dropped for the first time in 2 years, declining 6 basis points quarter over quarter, but up 14 basis points year over year to 0.40% in the quarter ended March 31st. And the C&I loans net charge-off rate rose 32 basis points from 0.14% in 2022 second quarter to a 3-year high. So now let's go, and then it goes through each one of these, but there's a number of categories here that I hope everyone is saying. And for the podcast audience, what we're looking at is we're kind of looking at net charge-off ratios, basically delinquency ratios for a number of different loan categories. So we could see here, the first one is farm. So basically ag, what they call ag loans, agriculture loans, farm loans. And we can see here that farm loans dropped down a little bit from the fourth quarter of 23 to the first quarter of 24. So farm loans don't seem to be doing too bad. C&I loans, what I just read off there, so they did drop just a little bit. However, you can see the chart pattern here going back to the third quarter of 2022. So for almost a year and a half now, basically, C&I, the delinquency on C&I loans has been going up, and now it's kind of staved off just a little bit, but it's still very elevated when compared to a couple of years ago. Multifamily, look at this. This is interesting. Look at this spike in multifamily from the third quarter to the fourth quarter of 2023, and then it came down a lot in the first quarter of 24. Now, I wonder, banks have been selling off a lot of loans lately, and I'm wondering if the selling off of a lot of those multifamily loans kind of helped massage that number, as it were. Okay, 1 to 4 family homes. Again, you kind of see the same trend with C&I here, where you're going back to the third quarter of 2022, and then it just elevated up, and then it's kind of bounced around a little bit, but still obviously elevated compared to where we were about a year and a half ago. Construction loans. Look at this. Look at that. Look at that hockey stick. Going right up. Obviously, construction loans, a lot of delinquency, and then again, it's come down. So you got to ask yourself, like, well, what happened to bring that delinquency down? Maybe some projects got finished and finally got pushed off, or finally got flipped over into permanent financing. Maybe some of the projects got finished and got sold off. Could be banks dumping again, selling those loans off, dumping it off. But it's again kind of interesting there to see that drop. Now we get to some of the interesting one, credit cards. So credit cards are just going, again, the third quarter of 2022 seems to be our marker here as to when this stuff started going up. And obviously, what was happening in the third quarter of 22, obviously interest rates going up. So here you can see, the delinquency has dramatically increased on credit cards. And I actually saw another article this week that basically say that almost 10% of all the credit card debt out there, which is well over $1 trillion at this point, is now almost 10%, like 9.87% of all credit card debt is currently now delinquent. And if you've been following my videos for last couple of months, you would know that I reported on credit card debt, basically saying that, this is a big problem. Americans, the average person's savings is just completely spent. They've maxed out credit cards. They've maxed out buy now, pay later. And now the delinquency is starting to rise. And now let's look in on auto debt. So you can see here again, same deal, third quarter 2022, and then bang, huge increase, and then it kind of dips off a little bit, but then boom, right back up. And so you've got auto delinquency up a lot. So we got credit card delinquency up, auto delinquency up, and here's other consumer loans. And obviously, again, you can see third quarter 2022 straight up. So some very interesting charts there. Just scanning this for a second. So, okay. But yes, like I said, just some interesting charts I wanted to show everybody. So obviously delinquency, something we have to net charge off, something that banks follow very closely. Obviously, this, I'm sure, looking at some of these numbers makes a lot of regulators and some bank executives a little nervous across the country because, just to think about how these trends continue and whatnot. So anyway, okay. What I wanted to do now to wrap up is I wanted to give a shout out to one of my subscribers. He goes by the screen name of Samson. Samson has been following the Lords of Easy Money series. He actually went out, he bought the book, The Lords of Easy Money, which I have a copy of. I keep a copy of right here. So The Lords of Easy Money. And he went out, he got a copy of the book, he read the book, and he just has asked some questions and just has said how much he's loved the series, and he's really appreciated me sharing with him, just going out and just talking as much as I have and as in depth as I have about this book because of how important and meaningful it is. And so I just wanted to give him a shout out. I just wanted to thank him personally for just being a great viewer, just watching, asking questions, putting in comments. I really, really appreciate it. I thank him so much. I hope he'll, continue to watch and enjoy the channel and hopefully continue to keep on asking questions. And then finally, I just wanted to say, I've been blown away by the number of people that are starting to watch this podcast, not only here in the US, but around the world. So I wanted to share with everybody just the different countries that have been downloading this podcast here. I got Germany, Australia, Qatar, Colombia, Costa Rica, India, Italy, South Africa, Tanzania, the Netherlands, Indonesia, Afghanistan, Argentina, Canada, Switzerland, Denmark, Malawi, Mexico, Portugal, Romania, Russia. And it just goes on. And it's just, I'm just absolutely humbled by the fact that so many people, not only here in the US, but around the world are just starting to tune in and check out this podcast. I mean, it really is amazing to me. And then I want to give some shout outs, people in California. Magically, if you're a follower in California, please let me know, because some people in California have definitely discovered the podcast here. Texas, Georgia, Virginia, Colorado, just the same. And then of course my peeps here in Pennsylvania. But just absolutely amazed at just how many people are starting to download the podcast on a regular basis and are starting to watch. And I just thank everybody so much. This has been an absolutely just crazy experience for me doing this over the last 8 months. And I've got a lot of stuff planned coming up here in the next few months. More interviews coming. I am going to experiment with doing a weekly live stream to see if I can I'm working on creating a weekly live stream show that'll kind of replace this. The weekly banking update will then become the weekly live stream show. So like I said, a lot of things coming up. I'm working on a lot of cool things that I hope people will hang around and continue to watch and check this out as I continue to go through this evolution with you, and this channel continues to evolve. And who knows what's going to happen in the months and the years ahead, but I hope it's all good stuff. So, but anyway, I wish everyone a wonderful Memorial Day weekend. Have a great time out there. I hope you get to spend a lot of time with family and get some great barbecue going out there. Remember the veterans that we've lost. I've had a lot of members of my family have served in the military over the years and the decades. And, very thankful for their service, very thankful for everyone who serves, and just our wonderful men and women in the military that continue to keep us safe every day. God bless them. Be safe out there. And again, remember to keep them in your thoughts and prayers, and remember all of the millions of soldiers that have passed away that have enabled us to have the freedom that we enjoy every day. So with that, I thank everybody. Have a great Memorial Day weekend, and I'll see everybody again next week. Thanks a lot.